You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, welcome back to TWIFO. This Week in Futures Options, a program where pretty much the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. Maybe we'll talk some corn, some crude, some gold, some silver, some rates, some ags. You never know. Some fluid milk, some hog love. You never know what's going to make it on the program. That's why you got to tune in every week. My name is Mark Longo from theoptionsinsider.com, the brand spanking new theoptionsinsider.com. Head on over there, kick the tires, and light the fires. See what you like over there with the new coat of paint, the new upgrades, the new features. Good stuff. Don't worry about the account stuff yet, but it could come soon. We could offer you some cool stuff on that front as well, so stay tuned for all of that stuff. And, of course, if I do sound a little bit different, it's because I'm coming at you not from our studio in Chicago, but from the southern studio. I shall be doing that for the next few weeks, looking out here as the storm clouds gather on the horizon here in nice and sunny, usually sunny, a little overcast now, central Florida here. But don't worry, the show must go on, and indeed it does go on here with Twifo. So let's kick things off. My cohorts here, my partners in crime, my usual contributors here. Mr. Sean Smith, first off, the managing director of Derivatives Licensing. The sun never sets on that guy. He's traveling the globe, hither and yon, getting that volume cranking. As we talked about last week on the show, decent numbers out there in the world of Russell options. To get to that a little bit, my other cohort, Mr. Nick Howard, also traveling hither and yon. So a lot going on in the world of futures options that they're dealing with while we keep on rolling with the show. Let's kick things off. It's been another good period there. All this volatility in the market across the broad spectrum of products translate into a lot of volume over there. By the way, you guys, of course, as always, can follow along live with the show and generate your own reports after the fact. CMEgroup.com/TWIFO. TWIFO. That's the place to go to generate your own report, see what's going on. You want to look at crude, you want to look at ags, metals, whatever the heck floats your boat. You can do it over there. And speaking of CME, good timing over there for them as they're hitting a lot of new OI records across a broad spectrum of products. The most recently happening just a couple of days ago, June 11th, overall CME Group hitting a new open interest record of 150.4 million contracts. Let's drill down a little bit, see what was lighting it up. No surprise, rates doing some business. Interest rate futures and options, 109.1 million contracts. Overall total options complex, so our wheelhouse, 96.3 million contracts OI, and looking just... That shows you how active rates are, listeners. Rates options alone, 78.1 million contracts outstanding. So just ridiculous numbers, however you want to crunch them out there. We're going to crunch things first in the land of the equities. You know, we're approaching the great Russell Recon of 2019. I'm sure Sean will be back with us next week to discuss that in all sorts of great detail. In fact, I do believe we have a listener question about that a little bit later. But this yet another week where the volatility comes and then it goes and then it comes and it goes. This week it kind of came and then it kind of went, but not a ton. It's kind of sticky right now. We're in this weird sticky equity volatility regime right now where we talked about it before on some of our other programs like Volatility Views and others. Term structure out there in terms of VIX futures kind of flat. The market kind of saying, we don't really know what the heck is up. So we're not going to crush it too much. We're not going to bid it up too much. We're going to kind of leave it flat, at least through the end of the year. It actually gets a little bit of a discount in DEES. So if you want to roll out to DEES, listeners, now's the time. Getting is good. But in general, things are kind of flat, and we're kind of seeing that reflected in the broad equity volatility, kind of hovering. We're coming into showtime here. We're seeing VIX cash at right around a 17, about a 1.5 lower, so lower than it was a week ago. But still, it's been kind of glued around that 16 handle for the better part of the last week. VVIX also coming off quite a bit, down to about an 84.5. That's, of course, the volatility of VIX. That's quite a bit lower. That's about, 9 points lower than where it was last show. And our old friend RVX off as well. It was about 20.5 last show. Now it's about 19.2. So off about a little more than a point, but 1.3 points. All that means the spread for VIX cash to RVX is pretty much unched up slightly. It's up from 3 to 3.2 points, but not a huge move. It's kind of been, as we said, things are sticky, and this spread is kind of sticky as well, hovering right in that range there of around that 3-point range for a little while. Let's dig in. If you're playing along on the home game, listeners, head on over to the drop down there, go to Equities. Then let's start off in the Russell 2000 land. Let's see what Sean's been up to when he's not hanging out in our studio this week. And it looks like on the Russell 2000 options land, kind of a quiet week. We saw some big blocks last week, of course. Can't see that every week, and we're seeing that pretty much is the case out here as well. For the most part, it seems like pretty much as you might expect, we're coming in at about a 1534 here in showtime, so almost 1535. Listeners, up about 1.5% on the week for the Russell 2000. No surprise, the 1500 puts in the weekly is going out in about a day are pretty much leading the dance here. Let's see what's going on. Let's scroll on down from the Russell 2000. Let's go up to the old E-mini S&P. See if we're seeing similar flow out there on that product as well out here. Remember, quick strike, the place to go, listeners, to kick the tires and light the fires. If you do that, Let us know how you like to use it. You like dark mode? Are you like me? Do you like to select all expirations? I like to go that way, but some people get a little intimidated by that because they require some scrolling. So that's not your bag. Let us know. S&P coming in. We're at about 28.90 here, so up 15 handles on the week, about 0.5%. So again, small caps outpacing the large caps in terms of percentage gains yet again this week. Vol, as we talked about before, kind of off yet again, but kind of staying sticky. Not a huge drop in the vol across the course of this week. It's kind of hovering. Like I said, VIX cash and the futures both staying kind of flat, and that's kind of what we're seeing here on the broad S&P options vol as well. Obviously, one derived from the other, so no big surprise there. Let's move on a little bit to see what we're seeing out here. 28.90 is at the money, and we're seeing, a similar flow, actually. 28.5 puts near expiring in a day are the pretty much volume leader out here in the E-mini this week. So 28.5 puts near out of the money puts, kind of the order of the day, pretty much in both major equity index products out here. 26.60. Looks like I'm looking out a little bit farther out, see if any esoteric prints. 28.5 puts also popular out here in the rest of June as well. So yeah, a lot of action in near-term downside puts. Speaking of a lot of action in the equities, you can't be talking equity action and CME without talking these new, well, not that new anymore. They're about a month old now, but still, in terms of products, they're nascent, they're babies, and yet they're lighting up the tape. Of course, I'm talking about those micro E-mini futures. We had the folks from CME on not too long ago. Sean was talking about them on our last appearance. These things, everyone expected a decent pop from them. These things are blowing the doors off, I think is the technical term out there. You guys clearly were waiting for a product like this because you are trading them en masse. Let's see, the numbers are in now for the first month of these products. And this is almost a week old, these numbers now as well. So obviously they're going to be even more robust. But still, the first month of liquidity here for these micro E-mini futures. Let's take a look at how it played out. Overall, 11.25 million contracts traded in total. That's across all four product categories. The big one, as you might imagine, is the E-mini S&P 500. Nearly 6 million of those, 5.81 million traded of those. Number two, the NASDAQ 100, 3.66 million of those. Number three, micro E-mini Dow futures, about 1.15 million of those. Number four, we've got the Russell 2000 doing 640,000 there. Number five, we've got, we don't have that number. That's the four major ones. But then, of course, we have the ADV, which is close to what the Russell has, about 511,000 contracts. So 511,000 of these things trading on an average day. Clearly, you guys are interested in these. No options yet, so we can't parse the options, but I can't imagine with this kind of flow that it'll be too long till we're waiting for that. 130 plus countries trading these things, 1.5 million contracts traded before the cash open on these. So yeah, people like these in different odd hours, which is kind of fascinating. So long way around to saying you guys clearly like these and you're clearly trading them. So it'll be interesting to see what they do in terms of new products on these. Maybe we'll get Tim and the rest of those guys on again, hold their feet to the fire a little bit in terms of when we're getting the options. But clearly these things are lighting it up across the tape, and you guys are loving them. So I guess ballyhoo to you. I guess we're talking about micro E-mini futures for the foreseeable future, because that's clearly what you guys have on the brain. Speaking of things that have been moving of late and doing a decent amount of paper as well, gold's been moving. Of course, rates on everybody's brain. So when rates are on the brain, gold tends to move. We've joked before, listeners have written in before saying, it's okay, you don't have to talk about gold vol anymore because it's kind of done. Gold's moving again. And coming into this show this week, this week maybe not so much, but it has been the last couple of weeks where we saw right about almost 13.5 right now, 13.46 roughly on the show. So kind of unched this week, but last week we saw some moves. Week before that, of course, as the Fed has been on the horizon and in the limelight. We're seeing gold responding accordingly. People flagging the quality in gold, looking for a haven against the rates. So either way, gold has been in the headlines. Vol actually up a little bit this week, which is kind of interesting. Out here, we're at, again, about 13.46 on our at the money strike. Let's see where the action was. If you guessed about 13.5, so near at the money, slightly out of the money calls, you'd be close. That would probably have been my guess too, listeners. But it actually is incorrect. It actually was out here in the SEP contract. I'm sorry, it was the AUG contract that was lighting it up. We had the AUG 1400. So gold bugs out in force yet again trading upside calls. Go figure. Another week, more gold upside trading. And pretty even throughout the week, too. 1,200 on Monday, 3,500 was the big day on Tuesday, about 2,300 on Wednesday, about 1,300 again today. Total about 8,500. Slightly closing actions. Maybe some people taking some profits off the table with the recent moves, or maybe deciding their overwrite was a little bit aggressive, taking it off either way, a little bit slightly, ever so slightly, only a couple hundred contracts closing. So it's more like a back and forth trade on that 1,400 strike. I'm looking to see if I see any verticals. Doesn't seem like any verticals were going up. We all know paper loves themselves a good vertical out here in gold. That does not appear to be the case. Then hot on its heels, too, as well, was out in Dees. Dees 1,700. So Dees doing 7,600 contracts. The Dees 1,700 is the second biggest trade of the week. Go figure. Not front month 13 halves. They only did 5,600 roughly. So a distant fourth or fifth here, and that is the 1,700s in Dees taking the number 2 spot with about nearly 7,000, almost all of that going up on Wednesday. 6,800 of that going up on Wednesday, pretty much all that opening as well. So someone opening on the 1,700s. Worth noting about nearly 4,000 of the 1,500s went up as well as 2,000 of the 1,400s. So looks like all on that same day. So looks like we got some more. 1,900s also trading 3,300 times as well. They love their funky ratios in gold. Funky upside ratios are kind of the order of the day out there in gold. Looks like it could have been, the ratio is all sorts of weird. It could be a 1x2, 1,400, 1,500, but then it's a 1 by almost 3.5 for the 1,700s, and then back to about 1 by 1.5 for the 1,900s. So it looks like something went up vertical wise, but I'll be darned if I can in a cursory glance see what. But it was all opening across the 1900s doing 3,300, the 14 halves doing 500, the 1400s doing 2,100, the 1500s doing 3,900, and the 1700s doing almost 7,000. Pretty much all that opening across the board. So Wednesday, ton of upside opening in gold in December, listeners. So go parse that stuff for yourself on the quick strike tools and on the blocks, because there's a lot to parse there. We could probably spend the rest of the show just parsing that. So gold upside, funky gold upside ratios. Where have you heard that before? Listen, let's go out to Dees really quickly just to see a little bit of the old skew action, to see how this paper has impacted the skew. Sometimes that'll tell us what the heck they're up to out there. It looks like the skew in Dees puts kind of unched, which is kind of what you'd expect. Calls are where the action was, again, as you might expect, and they're up. So it looks like we got some, as you probably would expect, biased upside buy-in paper on the call side. 16.1% rich to the at-the-money. That was a week ago. This week, 18.5% rich, so up nearly 2.5% this week. So upside call opening action in Dees here is bidding up that call skew, and pretty dramatically. That's why we like gold. Gold tends to move in the skew realm, which is always fascinating for us. We're going to keep an eye on that one here. That, again, we could probably spend many hours parsing all that gold. Again, I was talking about one of our last shows, and some of our co-hosts had some interesting insights that, which is true. And we kind of been joking about the numbers of late, things like non-farms and PMI and all these things that used to be big and now not so much, and starting all of a sudden to maybe take a little bit more relevance again. Gold, we're seeing unemployment benefits rising unexpectedly for the week of the 8th, and now all of a sudden some concerns about labor market slowing down, and that, of course, being felt out there in gold land. Of course, everyone's playing Fed Watch. We've got Fed Watch right now at, let's see, I thought I had it here. I'll pull it up later here, but I think it was at about a 75%, if not more. It is at about a 76% probability that rate's going to remain unchanged, according to the Fed Watch tool there. Again, if you haven't checked it out, again, just type CME Fed Watch into your browser, listeners. It's some interesting stuff. Pulling real data from the markets, which is what we like to see, as opposed to what some analyst thinks, because who cares about that? But yeah, the labor market making the third straight week of unemployment application increases. So again, maybe showing labor market tightening a little bit, and that being reflected across the space, including clearly this week at least, some upside in gold. Speaking of upside, if you're talking upside this week, we got to go to the dark stuff, the Texas tea. Got to go to the crude, because, whenever the bombs are going off, whenever the missiles are exploding, that tends to generate some vol. And at least in the case of crude, it tends to generate some upside. And that's pretty much what we're seeing right now. Remember, if you're playing along the home game, listeners, you go to W Energy, then WTI, and you can pull all this up for yourself. Again, up to you what you want to choose, select all or not. I tend to select all, but pick your poison out here. And yeah, tankers lighting up, or literally out there in the Gulf right now as they're coming under fire from what people are claiming to be state actors, typically out of Iran. 2 tankers in the Gulf of Oman, it looks like being targeted by Iran. There were oil and chemical tankers. We saw that on our last show as well. We're seeing LNG names spiking as a result. Obviously, crude itself spiking as well. There we go. Now it's all pulled up here so I can look here. Remember, select all. That always weighs down the load, but it's worth seeing all that data, listeners. So coming into showtime, yeah, we're seeing WTI was popping but net on the week, we're still off. So the tanker weight not offsetting what we're seeing here for the broad week here. We saw it jumping in the immediate news of this attack. We saw it jumping right around 1.5 handles or so, roughly 3%. But in general, it's been down net on the week. So they were trying to threaten, maybe try to rebound a little bit in WTI, but overall not materializing. Coming into showtime here, we're at about 52.25 off, nearly 2 handles again, about a little off 3% total on the week here in WTI. Of course, all this upside, well, recent upside, but now downside. All this just back and forth, quite frankly, is generating vol. And that's something we've talked about here with Russell on the show in the past and others about how maybe crude, everyone talks about equity vol, how it can spike to the upside, but crude, maybe an unheralded name in that propensity, and certainly delivering again this week with a little bit more upside vol and up pretty strong across the board. Looking here, up 5 handles on this contract. D's contract up about 1.5 handles. You're talking, SEP, NOV, all that kind of stuff. Up 4 handles, 2 handles, 5 handles as you're getting a little bit closer to home here out in June and July. So big move. Some of those mostly gamma, so bear the front portion of the curve in mind. But seeing 5 handles out there in SEP and indeed beyond. So yeah, 5 handles in vol. That's a big move. So crude vol has been an interesting beast to pay attention to, and we shall continue to do so in terms of, again, the 52.25 handle is our at-the-money point coming into the showtime. And given all this recent movement, not surprising, we're seeing 50 puts lighting it up. Obviously, people are concerned about breaking the 50 handle to the downside here. Number one by an order of magnitude here. That was definitely the big print of the week. And these are going up here with contracts that have not even 4 days to go. These are the July contracts lighting it up this week. 28,000 roughly of the 50 puts going up pretty much all week, even though the lion's share come in on Wednesday and Thursday. 13,000 on Wednesday and almost 10,000 today, 9,300 or so as of showtime here. So yeah, over 20,000 just in the last couple of days. Total of 28,000 on the week. A lot of back and forth throughout on this track throughout the week. So net slightly biased to the closing. Obviously, we don't have today's numbers, so bear that in mind from an OI perspective. But still, back and forth trading on this 50 strike as we threaten it, then move away from it, then we move to the upside with some tanker attacks and threaten it again. It's been a lot of back and forth, and the 50 strike, again, we talked about it before, people like to aggregate their liquidity on even numbers in crude, especially 60 puts when we were up there before, then 65, and now 50 handle is kind of the order of the day. And then right behind it, though, number 2, again, seeing all this action in this pretty much 4-day-to-go contract this week. The double calls, also active. Again, maybe some of that tanker attack happens, but not all the paper was today or even yesterday. It was 6,000, pretty even throughout the week. Almost 6,000 on Monday, about 4,000 on Tuesday, about almost 6,000 on Wednesday, and almost 6,000 again today. So a little over 20,000, about 21,000 total on the week. Also slightly closing, but a lot of back and forth. So back and forth trading on the 50 puts and the double calls. All of that in this July contract. It's got about 4 days to go left. So a lot of churning and burning here this week. 51 puts doing 18,000 this week. 54 calls, 15,000. A lot of action here just in this July crude contract here. A ton. Really interesting. Total OI on the week is probably about 2.5%. So that's fairly standard, actually. I thought it would be a little bit higher given these numbers. I guess just this contract alone is really dominating the tape. Let's look a little bit farther out just to see if we see any weird prints like we do in gold. 40 puts and 45 puts actually doing a little bit of paper here this week. We've got March of 2020, 40 puts doing 1,100 there this week. 45 puts in D's 2020 doing 2,000 there this week. So some interesting longer-term trades. Not all puts all the time, listeners. Also the double calls in June of 2020 doing 2,300 this week. So it's not all Not all far downside, but there is quite a bit. Let's see. If you go all the way out to D's of 2022, we got 45 puts doing 1,100 contracts out here. Let's go back to the active contract. Again, it's got 4 days to go, so you can't really parse the skew in this because it has moved quite a bit, but it's going to. It's got 4 days to go. Let's go a little bit farther out to another active month. Let's go out. Let's see. Where do we want to go? Let's go out to the AUG contract. It's got a little bit more meat on the bones, and it did some paper this week as well. Let's see what's going on in the skew out there. The put's getting a little bit more bid. Go figure. From 7.5% last week to about 8.7%, almost 9% rich to the at the money. Meanwhile, the calls coming in aggressively. They're about 5.4% cheap to at the money this week. They're 8.6% cheap to the at the money. So coming in nearly over 3% actually out there. So interesting moves out there in the skew. Again, we are net down on the week, so this little blip for the tankers notwithstanding, the net trend has been to the downside. Again, while you're seeing probably some of that skew reacting the way it is. What are you up to out there in WTI and indeed crude land? Hit us up. Let us know. We want to hear from you guys what you're up to. I know you guys would be happy if we talk crude all the time. Unless, of course, we talk to those of you who want your ags and everything else. But we know a lot of you love yourself some crude. Meanwhile, though, we have to keep on rolling here, listeners. We talked some ags last week. We talked some rates as well. Let's go on in. A fun tool for us that we like to talk about here on the show, listeners, is one, and I encourage you guys to use this as well. Usually we do it here at the end of the show. We're going to throw it up a little bit earlier because it has some interesting data for us, interesting nuggets. Of course, I'm talking about these market scan tools that allow you pretty much to determine what the big movers and shakers for the week are. If you do that, listen, this is, again, purely on an underlying futures movement basis. Nothing else going on there. If you do that, listen, make sure if you want to keep it in line with our TWIFO analysis, you set the date range to the previous week. And then when you do that, you'll see what's lighting it up. Some big movers to the upside. Let's go up here. Number one with the bullet, listeners, nearly up 20%. Lumber. Number two, iron ore, up nearly 12%. Number three, the Eurodollars, up nearly 9%, 8.75%. Number four, corn, our old friend corn, 8.25%. And round out the top five here, we've got palladium, up about 5, almost 6. Actually, I take that back, up nearly 7%, 6.75%. Let's go to the dark side now. Much smaller from an order of magnitude perspective than we saw, nearly 20% for lumber. Lean hogs leading the downside here, about 4.25%. Number two, or I should say the second from the bottom, the feeder cattle off about 2.25%. Then we've got Aussie and New Zealand dollars off not quite a full percent. And round out the top five, or bottom five, top of the bottom five is rough rice off about 0.5%. Lumber moving quite a bit here, listeners, up 20%. And it's not exactly a name that we normally dive into in terms of options activity. Let's do a quick and cursory check in here. And let's just see, again, go back to the quick reports home, the This Week in Futures Options report, so you can get back to that good data that we like here. And then let's see where we can find this. It's not really a contract from an options perspective that we could really sink our teeth into on that front. I'm just looking here really quickly. You got the wheat and everything else, but no, unfortunately, can't get ourselves the lumber. That's unfortunate. Big move out there again. Let's cattle. We can do the hogs, I suppose. Everyone likes a little bit of hogs, but I was hoping to get a little bit of that lumber action. Let's see here. Oh, I take that back. It's buried under the softs. There we go. All right, here we go. Let's go into the lumber. I'm going to select all, even though it doesn't really need it, because as you might imagine, not a huge options product, which this week, maybe that will change. OI up about 2.3%. That's still not a lot, listeners. The lumber coming into the show time here was at about almost 374, up, like we said, 18.3% this week, or about 58 handles to a 373.8. So for all you out there trading and tracking yourself some lumber, that's where the action is settling out coming into showtime here. And just give you an example of, let's say, how little this one trades from an options perspective. The 320 puts are the big trade of the week, listeners, up here in this front contract that has about 2 weeks left to go out here in July. and we've got 68 contracts, 68 of these puts. That's the number one trade by a country mile out here. So not even that near term, 50 handle out of the money puts, 68 contracts. So unfortunately, not a huge option. That's people writing all the time. And you see this huge mover. Why don't you talk this one for options? This is partly why, because a lot of these names that are doing big underlying movements just don't have a lot of options movement to go along with them, or options volume to go along with them. We'd love to parse them all, listeners, but sometimes not the case. That's why we like to do a little bit of that sometimes to show you. Something like a Eurodollars does more than that in just one print, let alone on the entirety of what lumber is doing out here. But speaking of what's going on, let's get to what you guys have on your brain with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback. Let's see what we got here. This is, of course, a portion of the show where you guys take the reins, your questions, your comments. You guys like to dictate what products we analyze too. That's why I like to leave a little bit of time for this at the show in case you guys throw us some crazy curveballs. SHUTDL wants to know if Nick is still scalping his gold gamma. Next time he's on, we'll have to ask him. See if he's still scalping out there. He does say it pays the rent, right? He likes his gold. So we'll bear that in mind. Mark Brandt saying last week, I think it was, he thinks corns and bean short straddles have been juicy for weeks. Yeah, we talked about those recently on the show out there in ag land. It was juicy, but as we also mentioned, some interesting stuff going on as they're moving along the skew curve, not really gapping. So we haven't seen a big pop, at least as of last week we hadn't, going into those. You just saw it kind of in general moving along the skew curve, not a huge change from a vol perspective. Tom D wants to know, what's the biggest stumbling block for an equity option guy looking to dip his toes into the massive futures options pool? I'll probably start with E-minis. And we got a similar related question here from Trillo47W. They want to know, I have to admit your show is luring me to the, quote, dark side. Ooh, well, futures options. I'm thinking about diving into corn. Good choice. So interesting. Two questions about starting points for futures options trading. This is interesting. Neither of you really, well, I take that back. Tom D says he's an equity option guy. So him dipping his toes into the E-minis, clearly a good starting point for him. Trillo here, 47W, doesn't say what his background. Maybe he's a farmer or an ag producer. Maybe he knows this space very well. I'm gonna go out on a limb and say usually people send us these questions. They typically are coming at us from the equity side of the fence. They trade a little SPY, maybe some Apple options, Apple stock, things like that, and then they want to dip their toes into the futures option space. And when you come in at it from that perspective, my usual default answer is typically, as what Tom asked, something in the equity realm, probably an E-mini S&P is a good place to start because a lot of you have some experience, some knowledge trading a SPY. So it will be pretty much as close to similar as you're going to get. Obviously, tax treatment, other things we talked about before, it's going to be a little different, a little bit better for you, quite frankly. So you'll be happy about that. But things that you won't really have to come to grips with the skew, come to grips with the order flow, things like that. Because that's all stuff, if you've been trading SPY, you've seen that before. So that's definitely where I tend to usually, in absence of other information telling me something else about you, in general, I tend to tell people, you probably want to start there because the skew won't surprise you. The flow, the open interest, what's going on out there won't surprise you. The things that move the underlying won't surprise you. It won't be as a complete shock. Like you dive into a lumber, or a lean hog, it's going to be a complete shock. It's a completely different beast. And the skew is different. What drives the flow is different. What drives the underlying is different. These are all things you're going to have to learn. And you don't want to learn while you're trading. That's an expensive thing. You hopefully want to learn a bit beforehand, and then when you start, you have some knowledge of the product, and obviously you get more experience over time, but you don't want to learn on the job and on the fly because that's expensive. So I definitely, in light of some evidence to the contrary, saying, hey, I'm a specialist in copper or whatever. Outside of that, definitely, I think the equity options, probably the E-mini S&P, are the easiest starting point for you. And then maybe if you want to branch out a little bit in some of the other futures options we talk about on the equity side that are kind of interesting, like we talk Russell a lot, not as liquid yet, but it's getting there. If you want to learn about, skew and how they differ a little bit and how the volatility difference, NASDAQ certainly as well, and the Dow, those are places you can maybe dip your toes in a little bit to get a little bit of a feel for those. He asks here, Trillo asks specifically about corn. Corn is an interesting beast. Let's pull it up right now here while we're talking, listeners, so we can see what's going on live in corn. But we talked before, corn vol has been moving. It's been all over the news. Even if you're not paying attention to the ag market, listeners, you've seen that, what's going on from a overall corn perspective. The rain's just been deluging the crop in the Midwest. Most of the crop couldn't even be planted. A lot of the farmers taking their insurance payouts instead, or opting to do that rather than trying to risk and plant their fields. That's of course a dangerous thing for them as well, because they're not getting a full payout. They're getting some proportion, maybe half or 2/3, somewhere in that range. So it's not exactly boom times for the farmers out there. That's been an interesting time for, of course, trading out there. Just seeing not a lot of product hitting there. We're seeing movements again coming in this week, of course, into showtime here. We're seeing corn at about a 441 half, so up another 20, almost 26 handles here, or about a little over 6%. So another strong week for the upside is, again, the wet weather, everything else continuing to pile on that space and drive prices up as a result. So again, you're getting into the ags, you're getting some of these commodity type futures options. It's going to be a different beast if you're coming at it for the first time. And the first thing you have to learn is, the price action. What drives it? Ags, corn, they trade on a different schedule. They don't trade according to non-farms and according to earnings calls and things like that. They trade, and then Fed cuts, they trade according to their planting and harvest schedules and ag reports and everything else. So a completely different slate of earnings or earnings related similar type events, market moving events, let's call them, that are going to drive that. So you have to understand that. You have to understand the price action and where the order flow is, who's trading what out there. And of course, that all translates into the skew. The skew is going to be markedly different in a product like corn. Let's pull up, let's see, what was the active month this week? It was the contract going out end of July with about eight days to go. That's a pretty tight market, but let's look at it right here anyway. Right now, the calls are bid, about 10.5% bid to the at the money, and the puts are nearly 14% offered to the at the money. You will, quite frankly, almost never see that in an equity option, barring some aberrant event going into an earnings announcement or maybe some crazy small biotech or things like that. Trading an S&P, you will very rarely, it's happened a few times, but not often, will you see a huge bid to the calls and a huge discount to the puts like that. It just simply doesn't happen. So that's something else you're going to have to wrap your heads around and get used to if you're trading these products for the first time, which is, again, why I say start in the equity indices, because it's a more familiar place to dip your toes in there and then kind of get the ball rolling from there. If you want to expand out to corn, maybe do a little paper trading first. There's a million brokers out there that will offer that for you. You can go to the CME site and they'll have a list of brokers there. You can choose to do that. Get a feel for the flow. Get a feel for the skew. Obviously, if calls are bid, puts are offered, covered calls, typical things you're used to doing. Maybe collars going to perform a lot differently. Put spreads, things like that. So get a feel for that before you dip your toes in there. These are all things you'll have to consider, and you go over the metals and that skew moves all over the place. They all do rates, same thing. It's a different beast entirely. So it makes it fun. So it makes it interesting. It makes it fun to do a show about this because these products are all moving all over the place and the skew is slinging hither and yon. That makes it really fun from a content, from a show, and from an analysis, and from a trading perspective, but also a little bit daunting. So if you're coming in for the first time and just kind of dipping your toes into these markets, and again, not knowing what else you guys know about and trade and do, I'm going to go out to my usually fairly standard recommendation to say start in the E-mini S&P and then slowly broaden from there. If you're going to go ags, corn is not of all the ones to pick, corn is probably one of the closest approximations in terms of size and liquidity and things. So it's not doing 5 contracts a day. It's doing some decent paper. So you won't be taken aback from that perspective. But again, all the other things I mentioned, the price action, the skew, the order flow, all these things, these are things you have to learn about. So I wouldn't say start in corn unless you're a corn specialist. I would say start in those other realms and then slowly extrapolate out and bring and learn. And as you learn, you can add new products to the fold here. What do we got here? We've got Elle SW asking, What is the date for the Russell 2000 reconstitution to take effect? Well, I'm sure Sean will be back next week regaling us with all sorts of data about the Russell Recon. Remember last year, this was a huge event. You know, if you don't pay attention to small caps, I get it. You're maybe a large cap guy or things like that. This is not on your radar. You should pay attention to this because it moves a lot of paper. It moves a lot of contracts. This is a big trading event. They're reconstituting this entire index, and as a result, you're seeing a lot of flow go up in a very short period of time, which is interesting. But if you want to know, he specifically wants to know the dates. There's actually a bunch of them, not just one. Elle SW. There's a lot of dates you got to pay attention to if you're doing all this. So their full calendar, their full suite of dates over there at FTSE Russell is as follows. So May 10th, obviously, already happened, was rank day. That's where they determined the Russell Index membership eligibility for the 2019 Recon, determined by their market cap on the close on May 10th. So that's already obviously happened. June 7th was a preliminary U.S. Index add and delete lists. They were posted. Again, FTSERussell.com was a place to go to find that. Go there or follow them on Twitter. They post that all there as well. June 14th, so tomorrow, and then the 21st. U.S. Index add and delete lists will be posted to FTSERussellWeb.com after 6 p.m. U.S. Eastern Time. So if you want to see the names that are being added and deleted, that's the place to go this Friday and next Friday. And then June 28th, the Russell Recon is final after the close of markets. So coming in on the 28th, listeners, is the big day you really want to be aware of. July 1st, obviously, the first day market's going to open with a new, brand spanking new, freshly reconstituted Russell suite of Russell indexes, really. So not just the Russell 2000, but across the board. So there you go. Elle SW and everybody else. Coming up dates that have not already passed, the 14th and the 21st. And then the 28th is the big day with the Recon going down. Going to see a lot of paper going up in a very short period of time. That's one to pay attention to. All right, we got time here let's do one more here. This is AllenTown. AllenTown wants to know if you had to be, I think he means bet on. If you had to bet on the next big crypto derivative, what would it be? Well, hopefully AllenTown and the rest of you have been listening to our Crypto Rundown show. We talk a lot about this sort of fun stuff out there. But in general, if I had to bet on the next big crypto derivative, it's funny. I guess it depends. When you asked me this question is what my answer would have been. If you had asked me a year and a half ago or so, the beginning of 2018, when it was hot and heavy and Bitcoin was threatening 20,000, everyone and their mother had BTC on their lips before they went to bed every night. When they woke up in the morning, it was all you guys had on the brain. It's all you could ask about. I would have said the options are coming, forthwith, post-haste. Definitely by Q2 of 2018. You guys are more optimistic than me. You guys all said Q1. I said Q2. Turns out we were all wrong. It's over a year later, year and a half later, no options. So I'm not betting on the options, and I've heard some other things in the interim that maybe think that probably is not the case. Maybe some notions of some not quite handshake / gentleman's agreements between the exchanges and the regulators that they wouldn't go crazy listing more products on those futures, and at least in the immediate aftermath of the listing. And I remember when I did maybe you guys might have heard that as well. I did a panel with some of the folks from CME and some others at the Voice of Blockchain event in Chicago last year. I asked Julie, one of the senior people over there, this question. I've asked Tim McCourt, many times on the show here on TWIFO. I definitely get the sense from talking to them that they're more on the expanding the listed futures side before they are adding the options side. So if I had to wager the next big, I'm not big, but the next one they're going to list will probably be, I'd say, an ETH future. I'd say if I had to put my money in the camp right now, I'd say probably that. So I'd say probably an ETH future. Maybe we'll get a slate of them at the same time. Maybe we'll get a Litecoin and a few others. But I think definitely ETH in terms of where the institutions are playing, where the most volume and interest is outside of Bitcoin. It does seem to definitely be in ETH. Everyone loved XRP for a while. It seems like some of that may have cooled a bit. And, and it was ETH and XRP were kind of fighting for that number 2 market cap slot for a while. ETH has a firm hold on it now. So I'm going to say Ether is probably my bet for, I don't know about big, but the next crypto derivative. I can't speak to volume, but I'll speak to listings. I'm going to go that way. I would love it. I would love to be wrong. I would love for it to be options on the Bitcoin. Look, we have a product that's gone from 20,000 to 3,000, now back up to 9,000, and now 7,500 and 8,000. This thing has moved a ton. It's trading quite near a 100 realized vol. It's at about a 95 as of at least earlier this week. How great would it have been to have some listed options on those futures. And I know Deribit, BitMEX, all them, they all trade volume. I get it. They do decent paper from an option perspective, but from a U.S. client perspective, you have to have a VPN. It's not quite really the regulated listed entity you want. So we all want to see something listed on these Bitcoin futures that are trading up a storm. Last month, April, May, both of them record months for both of those. So it would be nice. I'm just going to put it out there. It would be nice to have options. I would love to be wrong, but I think it's probably going to be something like an ETH future probably next. All right, everybody. I want to thank you all for joining me here on this sojourn through the easy for me to say, on this sojourn through the Southern studio and also through the world of futures options. We'll be back next week to talk Russell Recon and all this other stuff as it's coming up. We won't be back in the Chicago studio. We'll still be back here in the Southern studio. So it should be good. We'll have some great guests joining us next week. So it should be fun. And until then, we'll see you back here for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.